Hello and welcome to a special edition of, I guess this is the Gold, Ghosts, and Guns Market Report. My name is Tom Luongo. We have a lot to talk about, and today we're going to talk about Waves. All right. Now, Waves is a cryptocurrency blockchain deployment and distributed finance and Forex ecosystem, and there's a lot going on with a lot of moving parts. And I recommended it in the newsletter a couple of months ago, and I've had no recommendation has created more questions that I can't answer easily than Waves has. And even when I answer questions like directly on our private Slack server, I get answers back like, I didn't understand a word of that. I'm like, well, okay, if that's the case, no matter how, I think it was pretty clear, but obviously there's a lot more that needs to be done. So first things first is to understand that if you want to get involved with Waves, you're going to need to swap into it in some way. Okay, if you're an American or you're a Brit or if you're from Europe or whatever, if you're Russian or Ukrainian or Singaporean or whatever, there's plenty of ways to get. You can go directly and you can buy Waves and or Bitcoin directly on the Waves exchange software. But for those of us in the West, we're not allowed to do that because AML, KYC laws, all that other rotten nonsense, capital controls, things that we've been worried about for years. So the first thing you do is you got to go over to Waves Exchange. Now, all of this is in the issue, I think it was the February issue, where I made the recommendations. You can go through the basics there. So I'm going to go over the software and the various moving parts and subsystems today to get you up to speed. So we're going to click over to the desktop real quick, and you get this app from waves.exchange. You can go to wavestech.io or and you'll get to Waves Exchange, and you download either, this is the Windows 10 desktop software, but it's available for Mac OS as well. And the desktop applications are the full featured applications. The mobile applications are not. At least the iOS application is not. So you can't do everything within the iOS app. You're going to have to, if you want to take advantage of all this stuff, you're going to have to kick it old school and get a desktop application. All right, so signing in, there's a number of different ways to sign in. You can just sign in directly through your email, which basically, once you give them your email, you tie your email to your seed, and you just type your email address in and you log in. That's not how I've done it. Unfortunately, I'm old school. I set up with software and my password and all of that, the kind of classic password. You can also log in using your Ledger device if you have a Ledger Nano or whatever. So you can use this as a software wallet effectively, but you can protect it with a hardware wallet. So I always recommend a hardware wallet. So I'm going to click back over here while I sign in, and we'll go from there. Hold on for just a second. Right. I'm not going to show you how I logged in because God forbid anybody sees how long my password is. All right. So that being said, let's click back over to the desktop, and I'm going to show you I'm going to go through just everything on the thing. I've created a dummy account for this tutorial, and which has no assets in it. But the first thing you can do is, again, if you're in the West in some way, manner, shape, or form, or you have a credit card that is issued from a non-Western bank, then you can buy either Neutrino or Bitcoin directly. I think you can also talk to them directly and like move large sums of money into the system directly through a swap, but I don't know. That's not on my my radar. So you can do that, but you have to have, you have to be able to get in there. You can't do this. I can't do it. I don't have an account in like DBS Group in Singapore or whatever, and a Visa card. If I did, I could do it, but I don't. So once you've got some Waves, and you can get Waves very easily, you can go to a broker like Changely.com. That's CHANGLLY, Changely. I'll show that. I'll do that real quick. You can go to Changely. Right, you can go Changely, real easy. This is a great broker. They have a great mobile app as well. You can exchange whatever you like for whatever you like. There's many different things that you can use. You can use this for a lot of different swaps. And it just, you put in the amount of Bitcoin you're going to send them, you tell them what you want, and you set the exchange up, and then you have like 36 hours to send your stuff to them. It's a wonderful thing. And their exchange rates are pretty solid. So, all right. So back to that. So once you've got some waves, you can go into your wallet and you can, it'll be there. So the wallet looks like this. These are the only tokens that I have here. A couple of these I don't actually need. I would unpin that one. I don't have any need for that. I don't have any need for Bitcoin Cash because I don't own any. I don't have any wrapped Bitcoin or Bitcoin SV or whatever that stuff is. Mostly, but you can use this as a custodial wallet for Bitcoin, Ether, Tether, okay, Dash, Litecoin, okay, Monero. It'll work. And if you have a ledger, you can protect it with a hardware wallet, and this could be your front end for all of those coins, and you can hold them on your account. And these are actual Ether accounts. Okay. Okay. These are actual Bitcoin accounts. Both a legacy address and segment addresses. Supports both. Okay. It'll all be tied to your Waves account, which will be up here. But, you know, you can have them all available to you. So you can transfer in Tether, USD coin, whatever. All right, so let's get started. So what does this all mean? So if you have some waves, the first thing you can do with your waves is you can stake it. Because what's important now is to understand that the power of the system is in this investments tab, okay, which is going to be most of this video, which is where most of the confusion comes from. Buying waves is as simple as going to Changelly, converting Bitcoin or Tether into waves, and giving them, you know, opening an account here, you know, receiving some waves and sticking it in your wallet. What do you do with it after that? Well, you could trade it on Waves DEX, which will come up in just a second. Okay. They've got a fully featured DEX. You can trade a variety of pairs. All the things that you can hold in your wallet, you can trade here. Okay. And there's a lot of them. You can trade these things versus Bitcoin. You can trade them versus Waves. And you can trade them versus both Tether and USDN as well. And these are all the pairs. You can nominate which ones you are your favorites so that they always show up at the top of the list. And you can also, what I like to do is look at the 24-hour volume of what's going on. So you get an idea of what's happening, how much volume is happening in the exchange. Generally around $5 to $6 million on a rolling 24-hour period is what you see on it's not a highly liquid exchange, but spreads on the major trading pairs are usually pretty solid, 0.3%, 2%, 0.1%, depending. I wouldn't use it for exotic pairs, but you can. And I have moved, for example, I have moved Dash and or Litecoin in and traded it versus USDN, and the spread's like 3 or 4%, but it really isn't. You know, if you're willing to be patient and wait, you can get a decent price. And the bid is usually close to the price you see quoted on Binance or investing.com or anything else. It's not as illiquid as it looks. It's just not a lot of people trade here. It's a good DEX though, from that perspective. To do any trades on the Waves DEX, well, you need Waves as your transaction fee. So 0.003 Waves, which at $15 is around 4.5 cents, right? So you can trade millions of dollars for 4.5 cents. It's pretty good. All right, so there's that. So this is just your typical distributed exchange. There are guys in here who are doing algorithmic trading. They've got programmable. I see spoofing on here all the time. It is what it is. It's fine. But for the most part, you know, there's a lot more quote unquote activity on this exchange than there is actual traded volume, and that's what it is. Okay, so now once we're done with that, trading, buying our wallet, the wallet has a couple of different views. You can view it this way. You can also just view your portfolio of what you own, which in this case is nothing. You can also get your transaction history list of everything that's happened, deposits, withdrawals, and all internal transactions, which would be transfers from one system to the other, dividend payouts, all that stuff. So you can export all this stuff in order to deal with your tax professional. It's all of it's right here, all available to you. So you don't have to go anywhere else. It may not be formatted in a particularly great way. I'm not going to, not going to tell you that I think the formatting is, or the data is particularly good, especially if you want to import it into Excel, but it's here. Okay. So from that perspective, that's not an issue. All of your information is here. It's a blockchain. It's an auditable blockchain, yada, yada, yada. All right, so let's look at the investments tab. So this is the cool part, right? This is the part that the whole system is like, hey, you can get 35% on your money. You can get this, you can get that. Let's start with the basics. If you hold Waves in your wallet, right? So you take a $1,500 flyer on Waves and you go buy 100 Waves. You can immediately stake it. And why would you do this? Well, Waves is a proof of stake based blockchain. It's not a proof of work blockchain. It is purely a proof of stake based blockchain. It's the kind of blockchain that Ether is moving towards because of transaction volume and informational variation on a proof of stake blockchain. It's just easier to deal with than on a proof of work blockchain, where the amount of information held in the block is, variable amounts of information don't really work as well in a proof of work blockchain. Okay. They don't work as well. So smart contract information and all sorts of weird stuff that can be held in a proof of stake blockchain is it just works better that way. I'm not here to discuss whether proof of work is better than proof of stake. I think that's not important, germane to this discussion. If you don't like proof of stake blockchains, stop watching now, because this is all about Waves and its least proof of stake style blockchain. What's a leased proof of stake? Leased proof of stake is very simple. You lease your stock of Waves, stake it. They called it leasing. Now that we have, and you may lease them to a staking pool, okay, which is the pool that is actually doing the validation work on the transactions as they come through, right? Just like any other proof of work blockchain, but in terms of proof of stake, it's a much less, I would say, robust system. And because of that, in order, the way the blockchain is secured is by people leasing their Waves back to the staking pools. The larger the staking pools, the more resistant they are to counterfeiting, attack, right, collapse, and all the rest of it. So, and the broader the user base, the more robust the system is. All right, so you can stake your Waves. It's very simple. It's cheap. It's 0.001 Waves to stake. You take 100 Waves, you put it in here, boom, 100 Waves. You put 100 Waves in. You don't have the proper amount of funds. I don't have any, but if I did, I'd do that. I'd pick a pool from the left, and they give you, the payout, how often they pay, and what the approximate rate is. Some staking pools take a percentage, so the numbers are different from here to there. The show whales production, the show whales is to tell you which ones are to filter out the ones that already have more than 4 million Waves staked, meaning, hey, if you don't want to go with trade, and effectively that comes down to Trade Assist and Caveman Labs. If you don't want to use those, and you want to spread the risk across the network out, then click that off, pick a different pool. I use both of those along with Black Turtle Node and wavesnode.net. I'm now moving into some of these smaller pools, not Wavesnode, Wavescap, and which is a nice website for looking at what's happening on the Waves network. But in order to spread the risk, to spread the wealth around, right? But I do want that. Why these guys have so much of the volume is because they pay daily and they pay 100% of their leasing. They don't hold anything back. They take everything, they don't hold anything back. They pay full price and they pay daily. So they can dropping little bits of money into your account every day, which is fantastic. And then you let that build up, and then you move some of your other money in when you reinvest into something else. So that's all you have to do. You pick a pool, populates there, you put in the number you want, you pay the fee, boom, you hit it, click, done. Explain, yeah, they're telling you directly. Don't use a large pool because you're centralizing the network, and the whole point of this is to decentralize it. So they're trying to get the pools to broaden out, and I respect that. I think that's important. Okay, so that's how you stake waves, and then you will get paid every day or every week a percentage of the transaction fees and the staking fees that the pool generates, just like any other trading pool. They make it simple, they make it easy, it's fast and it's direct, and it's done. So that's the easiest and most simplest thing in the system, and I do recommend you do it. You take a certain portion of your stake into this whole thing, and you put it here. It's not sexy. It's only going to get you 4 or 5%, but also capital appreciation versus the dollar. But this is how you make the system more robust. Most of the money that I own in this system is staked as waves, like 85%. Okay, then you can get into the more risky stuff. Higher interest rates, more risk. Lower interest rates, less risk. Let's start with LP staking. And you'll note, well, let's start with Bitcoin. I'm not going to go through all of these. I just have to go through one of them. Basically, this is an interchain staking product built on the Waves blockchain, right? So funds are accumulated on the Waves blockchain, which are then proxied in DeFi and products of the Ethereum ecosystem, including Curve, Uniswap, etc. When you stake your Bitcoin, so say you own some Bitcoin and you want to stake it and receive this annual percentage rate, you will receive as a receipt for staking your Bitcoin the token BTC LP. It's basically a receipt. Now, BTC LP is what's going to rise in value. Over time, it's just going to rise in value, necessarily rise in value, based on the returns within the DeFi products on Ethereum relative to Bitcoin. Okay, so these will necessarily rise in price. When you unstake them, you will get more Bitcoin back than you put in. So if you put in 0.1 Bitcoin, you hold it for a year at 5%, you're going to get 1.05 Bitcoins back next year, this time next year. It takes about 2 weeks to unstake, though. So all of these LP style staking products, be it Bitcoin, Ether, USD Coin, or Tether, will take 2 weeks to unstake. So when you go in, you're going in with the knowledge that you're not going to have a lot of ability to move in and out. If you want to unstake your waves, it takes a minute to get your money back. Okay, it just comes back with the next block that you just unstake, and becomes your money gets credited to your account with the next block that goes through the pool. Minute and a half, whatever the wave. I think it's like a minute and a half is the waves block time. Okay, so that's LP staking. I have a little bit of Ether. I have that staked personally, making 13%. I don't own any of this. All right, so that competes with the next thing, which is straight up Neutrino staking. So let's talk about Neutrino. What is Neutrino? Neutrino is a stable asset deployment protocol, meaning Neutrino you can create any kind of asset within Neutrino. And you can tokenize an asset. So in this case, USDN is a Neutrino-based US dollar stablecoin, just like Tether, just like USD Coin. And so when Neutrino, for example, how do you get Neutrino? Well, what happens with Neutrinos when you get them, USD Neutrino, you can either get them, on the exchange directly by converting waves into USD or Bitcoin or whatever, USDN, and then, or you can immediately swap in from waves. If you buy it on the exchange, you're buying existing tokens. If you swap in this way, you're actually creating new tokens. So for example, if I put in 10 waves here, I'm going to take these 10 waves off the market, okay, lock them in a smart contract, and receive back 149.34 USDN. I'm going to pay, and every smart contract invocation on waves costs 0.005 waves. Doesn't matter what it is. And you're going to pay a protocol liquidity fee and collateral fee. And no, this is what it costs to create it. Okay. And it's not necessarily cheap. Some of this goes to the holders of the governance tokens that are going to get paid. Some of this is going to go as primary collateral for the smart contract itself to deal with currency fluctuations, all the rest of it. Okay. So what's interesting about this is as demand for Waves and USDN rises and falls, okay, or as this is a stable coin, as USDN demand rises, Waves has to be pulled out of circulation and locked in a smart contract. There's an algorithm that does that automatically, and I think does the actual trades on the exchange. And the opposite occurs when people are selling USDN, or they're buying USDN, or they're selling USDN. They have to unlock Waves, and there's a give and take. There's an algorithmic supply of elastic money with Waves as the underlying foundational asset. In the same way that the Federal Reserve creates money through the repo markets, elastic money through the repo markets, Waves and USDN does the same thing. Okay? And so there it is. And now every USDN, though, is backed by a certain number of Waves. Okay? And if USDN are sold, then those Waves are dumped onto the market, price drops, people come in, buy Waves, yada, yada, yada. And we have a market. All right, so that's the first way you can get them. So what are you going to do with them when you have them? Well, you can stake them in a variety of different ways. And there's about 4 different ways you can do it, but let's just start with the basics. First thing is you can just think of the USDN or Neutrino style staking as savings accounts. It's all they are. The savings account paying 12.24%. You take say you have $100 worth of USDN, you want to stake it, you open up a thing, you put in some money, you invoke the smart contract, 0.005 Waves, you stake it, it goes in, and it sits there, and every day it pays you an APY. It pays you 1/365th of this APY of your balance every day. Boom, and you'll get a payout history. I've been doing this since November. Okay? It works, it's beautiful, it's seamless. If you want to unstake it, it takes a minute to get your money back. There's no time loss here. Okay? You're just locking your money away in a savings account, allowing the algorithmic central bank, allowing your banker, to use that money to provide liquidity to the market, okay, for various other aspects of the system. All right, so you can do that with USDN. But the US dollar isn't special. They got Russian rubles. They got euros. Same thing. This is the thing about this that's very interesting, is that these are the stable assets they've already created in kind of anticipation of, in many ways, of where they expect demand to be. There's a fair number of euros in circulation. There's not very many rubles. There's a fair number of, growing number of yuan, British pounds, Turkish lira. Actually, Waves is actually quite popular in Turkey and in Brazil and in Nigeria. No surprise. It's a Ukrainian Russian-based project, so the Ukrainian hryvnia is in here as well, which I find hilarious because the Ukrainian hryvnia, along with the Turkish lira, are basically dead currencies as far as I'm concerned. But if you need to have some currency hedge exposure to those currencies, you can do so. What's interesting about all of this is this gives you the opportunity to create a currency hedge fund against your crypto assets and draw a yield. And today the yields are pretty high. Okay? Now the last thing to talk about over here is NSBT. What is NSBT? Well, NSBT is the governance token. Excuse me. Now, what's a governance token? Well, this is the interesting part about this. All of the assets that are issued, the weighting of, the payout rates and all of this stuff, ultimately are going to be decided upon by the holders of the governance token. So you can buy NSBT. They are expensive. They are not cheap. You can either pay Waves for them and lock them in a smart contract, or you can buy them off the exchange. They're only going to emit up to a certain number of them. There's about 60% of the total number they're going to emit in circulation. They've been emitting them. They've been propagating them across all the other DeFi platforms that Waves is now tradable on. So on Binance, on Ethereum, and I think Cardano and a couple of others. Okay, it's out there now. Qcoin, Binance, yada yada yada. So, and they airdropped a bunch of them, and that's why the NSBT token is like exploded in terms of volume, or not volume, but size of number of out there. But now it's to seed them into the marketplace. Now they're there, and what happens with NSBT? Well, you get two things. You get the ability to vote on the creation of new assets. So if you want to see a Canadian dollar Neutrino stablecoin, and that comes up for bid, you can, they said, well, next month we're gonna add a new currency to the group. So we're choosing between the South African rand, the Canadian dollar, and something else. Well, I'm going to vote for the Canadian dollar. Somebody else is going to vote for the South African rand. It's NSBT that gives you the right to vote on that. That's the first thing. The second thing is that when money flows into the Neutrino system, either in the form of people buying Neutrino USDN directly, or buying it by swapping Waves into USDN, you get paid a pro rata dividend for those transactions, and that's what this means. So far today, it's been $1,000. On Friday, it was $10 million flowed into the system, and we got paid a percentage of that based on the number of NSBT we own. Okay? And I own some of these, not a lot, but some. And I will say that what I've seen so far in the 4 months that I've had the NSBT tokens, I think I've pulled in dividends. Most of them have come in the form of USDN, about 90%, and about 10% has come in the form of Waves. Obviously, the Waves has increased in price since then over the course of time. And that has produced around 10% of the money that I put into it in 4 months. So you're thinking right around a 30 to 35% annual yield, if all things being equal, and that continues through the rest of the year. Okay. And so far, it's been relatively stable on a monthly basis. And again, you can track your income. They'll track your income for you daily, weekly, and monthly, both in terms of number of USDN you were issued and number of Waves you were. And it's all converted into a dollar equivalent. You can change that to something else. I think you can change that to British pounds or euros. Doesn't matter. But that's what NSBT is. You can buy them on the exchange. You can swap them in directly. You can swap Waves to NSBT. But here's the thing. This is not the way you get them back out. They will always be worth, there is risk associated with them. Because the whole system collapses, your money will go to zero. Okay? But at a minimum, you will be able to get them back at a rate of $1 per. They are currently trading at around $25 to $30 per, something like that. So yeah, you can get you're guaranteed to get back, 5% of your original collateral if the thing collapses. But to give you an idea of what USDN looks like, or NSBT looks like, that's the chart of it. The possibility of it going to zero is pretty low. If you stake them, so you can buy them if you own them, but you have to stake them. Just like everything else, you have to stake your NSBT. Back to Waves, NSBT. You stake them just like anything else. You can unstake them. They come right back out whenever you want, and then you can immediately turn around and sell them on the exchange. Okay. Looking at them again, and there's your weekly chart. There ain't much here, but there you go. Okay. Looks to me like there was a back-to-back 2-bar reversals here. So looks pretty bullish. I was back in here, and I bought, I'll be honest with you, I bought up in here, and that was looking really grim. I'm like, oh my God. And I'll say to myself, why didn't I buy more of them down here? I obviously would be up 5x my money in 3.5 months. But these systems just went live, and they went crazy, and now we're back to where we are. But you can see that the contract price on NSBT and the traded price on NSBT is continuing to rise. And same thing with swap, same thing with USDN. The volume on USDN is rising. So this system is seeing capital appreciation. All right. The last thing to talk about, and I'm not going to talk about Swap.fi today because I haven't set it up in such a way to, and I'll explain what Swap.fi is in a minute, but I haven't, because I haven't set it up in such a way that I can do so and not show you my money. I don't really want to do that in public. So, but that's the last thing to talk about is Neutrino pools. And as of after 4 months of dealing with this, the pools are they're a really weird thing. They're a secondary collateral pool of the Neutrino currency system, along with the basically what amounts to the protocol fees and the collateral fees you paid in the first place. What this is you can invest in these pools with USDN and you will get paid in the local currency. So if I want to invest in the Russian ruble pool, I just pick that pool, right? I put in a number of USDN. I'm putting USDN in. USDN is being held on a smart contract and it's going to be paid on a daily basis in Russian rubles at this rate. That rate fluctuates all over the place. The staking income is based on the basic rate for the Russian ruble, and then there's fees that come in as well. The fee number rises and falls based on the demand, the demand for the Russian ruble. When the pool feels under collateralized, the fee number goes up, and when the pool is over collateralized, the fee number goes down, along with the staking income. These numbers are higher than they've been in a while, and that's a good thing because there's been no capital moved into these pools in quite a while, very little. The darling of the day is the Turkish lira. I don't know why anybody, well, and it's and from my perspective, it's under collateralized. But you could do that. Boom. Understand that there are risks associated with the pools, just like with NSBT. You might not be able to get your money out when you want it. If the pool is under collateralized, and the British pound pool is usually terribly under collateralized, there it is. The collateralization rate here is it's $85,000 in the pool, but there's only $102,000 in collateral. So being able to put your money in and get it back out again is a little dodgy. So if you're going in for the long haul. Me personally, my favorite is the Russian ruble. Obviously, one, it's massively over collateralized. Two, it pays well, and three, I feel like long term the Russian ruble is going to rise versus the US dollar, or at least serve versus US dollar, and so I'm getting 3 or 4 points over what I can get for US dollars and ruble. I get paid in rubles, and then I can go back over here, and obviously if I have those rubles will get dumped into your general account here. You'll have a balance up here which you can then stake and earn percentage rates on. This is supposed to be a way to supplement to get better rates than you can get off of your USDN. Okay. So that's what this is for. It's also to provide secondary form of collateral to the entire system. Right now, there's about $800,000 total in the system. And I think part of the problem is that it's competing with all these other more lucrative projects, specifically like ETH and Swap and a variety of other things. So that's an overview of how this whole system works. What's interesting about all of this is that you can literally run your own crypto fiat currency hedge fund here within the system. The whole thing is designed from the ground up to be its own kind of monetary system. And I find that fascinating. So I hope this was helpful. I'll do another one explaining Swap.fi at a point in the future. Understand what Swap.fi is. I will just kind of go over to the website now. Swap.fi is an automated market maker system that, for all intents and purposes, provides pools of liquidity for individual swap pairs. So swapping Waves versus BTC, there's $8.5 million in liquidity for that swap, which is, anybody can do instantaneously. You just come over here, you go, I'm going to swap Waves versus BTC. I put in X number of waves, like that, and I'm going to pay a flat 0.3% fee. for the amount that I put in. So say I do this. That's, I can't do it because I don't have any funds on this account to do that. I don't have enough funds on this account to do that. But there you go. You'll note I have 1 Waves in my account currently. So if I wanted to swap that 1 Waves for BTC, I could do that. I'll pay a flat 0.3% fee. So in this case, like 73 sats to get this amount of Bitcoin. Done. Fast. Over. And the whole point of Swap.fi is that you can go in and you can provide liquidity to both sides of the transaction and get paid, just like NSBT, the governance token. You can get paid in a token called Swap to which trades at around $20 a piece. You get paid in a token called Swap a portion of the fee. The portion of that 0.3% fee is paid out to you in the form of a token, which you can then do whatever you want with. You can stake it within the swap system. You can go right to the Waves exchange and sell it and go buy waves or dollars with it. You can do whatever you want with it. But it's a token that pays you, and it pays well. Right now, I think if I go into back into the pool information, I'll give you an idea of what the rates are. They're the rates that you're getting paid. Some of them are quite lucrative. And then there's also, you can just take your swap that you get from yield farming here, and you can just put it right back into governance, which then gives you control over the weightings of each of these pairs within the pool, and you get paid on every transaction that happens. These, you get paid when somebody swaps Waves for Bitcoin and you have provided liquidity to this pool, you get paid. But you don't get paid when somebody swaps ETH. Governance, you get paid when anybody moves money. Okay, and that's so liquidity provider fees here, governance fees here. That's what was paid out in the last 7 days. The holders of $44 million worth of liquidity, and about $5 million, I think, in swap. Do the math; it's pretty good. All right, that's what I got for you this morning. I hope this was. If you want more information about this, gets really complicated. It took me a couple days to figure out what was going on, and I made some mistakes and it cost me money and yada, yada, yada. But I finally figured it out. And one of these days I will make a video going over how to do all this. I just need to set it up in such a way. I got to make a dummy account with a little bit of money in it to show you how to move stuff around, which I will do at a later date. So for now, we'll go with this. You guys, I'm going to go back to here. Hi, I'm back. There we are. I hope you all enjoyed this. I hope this was illuminating and interesting, because this is the future of money. This is the future of what crypto is building. Why Waves is important, or this is the system that I've picked. I don't own a Binance account. I don't own a Kraken account. I don't own, I'm not on any of these other Ethereum-based systems. I was involved with Waves back in 2017, 2018, nominally, when it was just the contract, it was just a blockchain deployment platform and nascent DEX, and very, very bare bones. And they had just started yield farming, and I was like, oh, I can get yield off of this stuff. Okay, let's buy a little bit of it and stick it there. And then I let it sit fallow during the entire bear market. When I came back to it, and back in November, I finally said, okay, we're not in a bear market anymore. I've got all this stuff laying around in various, I got all these cryptos from 2017, 2018 laying around. I need to do something with them. I need to consolidate, figure out which ones I'm going to keep, which ones I'm going to get rid of. And when I came back to Waves and tried to figure out what was going on, I was like, oh my God. And I was completely blown away. So I spent some time kicking the tires, making mistakes, learning all the things to do right and to do wrong. I'm an inveterate bit twiddler, so I twiddle these bits all day long. It's kind of distracting, actually. But this gives you the opportunity, if you're going to be involved in crypto, this is a one-stop shop to do all the things that you want to do. And if you have a ledger, you can protect it all behind a hardware wallet that will alleviate your worries about anybody getting a hold of your crypto. So something else to think about as well. All right. So that's what I've got for you this morning. You guys take care. We'll talk soon. We'll talk on tomorrow, as a matter of fact, because tomorrow's Wednesday. So you be well. Keep your stick on, guys.